You know the dream, right? Passive income from rentals. Mailbox money rolling in while you're relaxing on a beach somewhere. But what if that dream is a total lie for anyone starting out today? What if the game has changed so much that the old rules don't just bend, they break, and following them leads you straight to financial disaster? Well, today, we're not just questioning the dream, we're putting it on trial. And we've got 3 experts who are going to reveal the brutal, new reality of real estate investing. So let's just cut right to the chase. Is building a rental portfolio for financial freedom even a realistic goal anymore? Or has that ship completely sailed? I mean, with crazy high interest rates, soaring prices, and all the hype you see online, it really feels like the deck is stacked against new investors. We're about to find out if that feeling is the new reality. So to get to the truth, we're going to stage a little clash of perspectives. We're going to dive into this whole rental debate through the eyes of 3 incredibly successful investors who all started in completely different eras. And believe me, their experiences could not be more different, and hearing what they have to say could save you from making a huge, costly mistake.
Okay, so in one corner we have Michael Zuber. We're calling him the veteran. This guy started buying way back in 2001 and quietly built a massive 180-unit portfolio, all while holding down a demanding corporate job. He's a true believer in the slow, hard path to wealth. Then in the other corner, you've got Brian Dilla, the skeptic. He jumped into the game around 2016, owns about 30 doors, and he is adamant that for the average person starting today, rental income is basically fake news. And right in the middle, you have Ryan Pineda, the pragmatist. He got his start in 2010, right at the bottom of the crash, and he's seen it all, the huge wins and the soul-crushing break-even nightmares. 3 experts, 3 totally clashing realities.
And this right here, this gets to the absolute core of their disagreement. See, the decade you started investing, it's not just some minor detail in your resume. It's the single most important variable. It fundamentally shaped each investor's philosophy, their entire outcome, and it explains why they argue so passionately about this stuff today.
What you end up with are 2 fundamentally opposing views, born from 2 totally different market eras. Zuber sees real estate as the long game. It's not about replacing your income in year 1, it's about building real, generational wealth over decades. Dilla, on the other hand, argues that for anyone starting now, that wealth is built on a foundation of zero cash flow. He's convinced it's a break-even game at best, where any profit you see on paper is just an illusion, waiting to be completely wiped out by the next big repair bill. This quote from Zuber just captures his whole philosophy perfectly. He's pushing back hard against that get-rich-quick nonsense that just exploded in 2021. For him, the grind is the feature, not a bug. He believes real wealth is earned through decades of patience, of weathering market cycles. In his world, if it feels easy, you're probably doing something very, very wrong. But then, bam, you get smacked with Dilla's reality. And this isn't a philosophy, this is a painful P&L statement. He's talking about the brutal truth of being a landlord today. You think you're making a few $100 a month on paper, but then a roof starts leaking in Joshua Tree, a sewer line collapses in Vegas, and just like that, your passive income for the next 5 years is completely gone. It's just this constant, stressful battle to break even.
This timeline really shows you exactly how their different experiences were forged. I mean, when Zuber started back in 2001, almost any house you bought would cash flow, and cash flow well. When Pineda got in the game in 2010, he was buying houses for like $28,000 at the absolute bottom of the market. But by 2016, when Dilla jumped in, prices were already climbing fast, which made finding a deal with positive cash flow a real challenge from day one. And then came 2021, the peak of easy money, which created this whole generation of investors with completely, wildly unrealistic expectations. Their entry point explains everything.
Okay, so here it is. The one thing that all 3 of these guys, despite all their passionate disagreements, absolutely agree on. It's something called the active income requirement. And what it means is this: to survive the brutal, often unprofitable early years of building a rental portfolio today, you need a high income from somewhere else. A demanding job, a flipping business, wholesaling, something that generates serious cash to cover the inevitable losses and those massive unexpected costs. Without it, they all agree, you are absolutely doomed.
And look, don't think high income means an extra $1,000 a month. Michael Zuber, the guy who built his empire the slow and hard way, he was averaging over $400,000 a year from his corporate sales job while he was buying all those properties. That was the financial engine that powered his so-called passive income journey. It was never just about the rentals, it was about having a massive amount of outside capital to fuel the growth and absorb all the financial hits along the way.
Okay, so we get the past, but what about the future?
where are we all headed? Let's take a look at their conflicting predictions for what the market's going to look like in 2026. This is where it gets really interesting.
Zuber, the eternal optimist, he sees a recovery on the horizon. He's predicting that transaction volume will pick back up from a 2025 bottom, that government stimulus for first-time buyers is going to juice demand, and that huge opportunities are going to pop up from all these busted syndications. You know, those big apartment deals that are failing right now. But Dilla, the hardened pessimist, he sees the complete opposite. He argues the golden days are long gone. He thinks increased regulations will make active strategies like wholesaling and flipping even harder, and he believes the market is fundamentally under attack for the average investor. Now, a huge piece of this 2026 puzzle revolves around interest rates. The general consensus which Zuber leads is that we'll probably see 4 or 5 rate cuts from the Fed. But, and this is a massive but, there's a huge caveat here that could just flip the entire script. It's the bond vigilantes. Think of them as the super powerful investors who buy and sell government debt. If they think the government is being irresponsible, they can basically revolt by demanding higher interest rates. And that could force rates up for everyone, even if the Fed is trying to cut them. It's a huge wild card.
So, given all this, how are these experts actually investing their own money in this crazy market? Let's break down their 2026 playbook. And you might be surprised to see that it has very little to do with traditional rentals. All right, here are their current plays. Zuber is hunting for big deals in those busted apartment syndications, and he's going after tired landlords for seller financing. Pineda, he shifted his focus entirely to wholesaling nationwide, a strategy designed to generate that high active income we talked about, but with very low financial risk. And Dilla, he's only flipping unique A-plus properties. He's completely avoiding the generic entry-level flips. Do you notice a theme here? Yeah, none of them are running out to buy a simple, single-family rental. The game has changed, and so have their strategies.
So, after all the debate, what's the one clear unifying conclusion we can draw from all three of these clashing perspectives? It's this. The game has fundamentally changed. The idea that you can just buy a few rentals and casually build wealth, that's a relic of a bygone era. The path to building real estate wealth is now significantly slower, harder, and requires way more capital, more expertise, and more resilience than ever before.
And all of this brings us to the final and, frankly, the most important question. Because this one isn't about them, it's about you. In this new real estate reality, what path will you choose?
So the path to wealth is now slower and harder. The question for any aspiring investor isn't just about finding the right property anymore. It's about taking a hard, honest look in the mirror. Do you have the high income you're going to need to survive those lean years? Do you have the decade plus of patience required for real returns? And do you have the resilience for the inevitable financial gut punches? Look, the dream of passive income isn't dead, but the price of admission has gone way, way up. The final question is, can you afford to pay it? This is the Brick by Brick channel, where we help beginners build wealth through real estate, one brick at a time. If you got value from this, hit the like and subscribe for weekly investor breakdowns.